This week, the stock market hits a record high, while massive unemployment grips the nation. Plus, a tense will they or won't they for California customers and drivers of the big ride-sharing companies. Now, all quiet on the Western Front for now, but how long will it stay that way? And finally, the housing market is hot right now as historically low mortgage rates fuel a record jump in sales. I'm MacKenzie Sigalos, and this is CNBC After Hours. Like we said, it was a record-breaking week on Wall Street. The S&P and NASDAQ both finished today at all-time high levels, handing in their fourth consecutive weekly gains, while the Dow is flat on the week. This is the S&P 500's second record close of the week. It took just 5 months for stocks to not only rebound from all that coronavirus-related market turmoil, but also to reach new heights. And two other big headlines this week. Apple's market value broke through $2 trillion and Tesla stock crossed $2,000 a share. But even though the stock market bounced back quickly, the drumbeat of recession carries on throughout the economy. We still have 10% unemployment in this country, and the latest data shows those jobless claims are rising. Plus, Congress still hasn't agreed on a comprehensive aid package. So the stock market is literally better than ever while the economy is crying out for help. How can these two things be true at the same time? CNBC's market expert Bob Pisani explains.
How is it that the U.S. economy is in very serious trouble right now? It's better than it was in March, but it's very serious trouble still, very high levels of unemployment. A lot of people have had no job for a while and may have no prospect for a job. And yet the stock market's at a new high this week. How is that possible? The stock market is not concerned with what's happening today. The stock market looks ahead 6 to 12 months. What the market is hoping for right now is two things. Number one is treatment for COVID improves, and down the line there's a vaccine. There's very good evidence that that is happening. Our treatment is certainly improving for people who get it, and vaccines are certainly advancing, although we don't have one yet. The second thing that's helping the market is stimulus and the Federal Reserve. Now, the Congress is working on a new stimulus program. It's stalled at the moment, but the market believes it's going to happen. The more important thing is the Federal Reserve. They are furiously stimulating the economy by pumping massive amounts of money into it, and that's why interest rates are so low. Federal Reserve is essentially telling you, go out and borrow money. We want you to help stimulate the economy. The way to look at this is there's almost two kinds of economies in the United States right now. There's a digital economy and there's everything else. What's the digital economy? Well, the digital economy is all the stuff that you buy online. It's your iPhone, for example, and all the ecosystem that's around your iPhone, this machine here. And think of everything that's around it. Think of the tens of thousands of people who make the semiconductors that go into this and the software that goes into this. Some of this is manufactured, assembled overseas, but a lot of the intellectual soft power, the firepower, is here in the United States. Think about Amazon, for example. It's not technically a technology company, but it is a technology company. Google, Microsoft, anybody who sells online, all these companies, because of COVID, they're seeing accelerated sales online. Now, in a sense, this is good news because it's making a lot of companies more efficient. It's making the economy more efficient. What about everything else? Well, in the S&P 500, you have bank stocks, which are not doing so great. Think about industrial stocks and the slowdown in industrial activity. Think about the real estate stocks that are out there. Think about the oil stocks. People aren't driving as much. There's a whole swath of the U.S. economy that's frankly doing terrible. Of course, it's the service end of things that are very disconcerting. It's all the hairdressers and the people working the restaurants and things like that that are having troubles. Try to understand that idea that there's almost two kinds of economies out there. There's a digital economy that's doing very well, and there's everything else that's either middling or doing very, very poorly.
And now let's get to our sound check. Here's a timeline of this week in business told in just a few sound bites.
I think at home working out online is here to stay. People have gotten the chance to get really used to it, and they're loving the convenience of it.
The good news is, despite Congress not acting because Pelosi and Schumer aren't willing to sit down and strike a reasonable deal, the president moved forward with the EO to help people who are still unemployed.
Well, I think Oracle's a great company, and I think its owner is a tremendous guy, tremendous person.
We're not going to restaurants. We're not going to movies. Those traditional summer trips have been canceled. We're not on planes. We're not spending dollars on lodging. So many of those dollars have been redirected into retail.
We really are taking social distancing very seriously. So when we open our doors, we're not going to sell more than 30% of our available seats. We have a whole host of initiatives underway.
I feel very badly. I haven't been dealing with him for a long period of time.
The pandemic is not yet where we thought it would be at this point in time. So yes, I think it makes sense if the government was to continue to extend this. This is money that's going to our workers to keep the workers on the payroll.
My economic plan is all about jobs, dignity, respect, and community. Together we can and will rebuild our economy. And when we do, we'll not only build back, we'll build back better.
But we would like for the Postmaster General and the Post Office to restore the services that was disrupted, the taking out of the sorting machines. They made changes without following their own internal procedures.
They have completely ignored the threat from the Chinese Communist Party, not only during their convention, but for the 8 years that they were in office. So if history is a predictor of how they'll behave, the Chinese Communist Party would welcome the departure of the national security team that's surrounding President Trump.
You know, if you look at disrupting the entire transportation market, which Tesla has the potential to do both on the passenger vehicle as well as on last mile delivery and heavy duty, you know, there's still a potential significant amount of growth in the market cap for them to go.
It's been a very dramatic 24 hours for Uber and Lyft. For months, these two ride-sharing giants have been at the center of a very public battle with the state of California. And it's all about something called AB5, which is a new law in the state that requires gig economy workers to be reclassified as employees, thereby ensuring certain protections like minimum wage, sick days, and certain health benefits. Well, the law went into effect earlier this year, but Uber and Lyft did not reclassify their drivers. Uber claimed its drivers were not part of its usual course of business. And then in May, the California Attorney General sued the two companies. And earlier this month, a judge ruled in favor of the state and ordered the companies to make their drivers employees. The order was set to take effect at midnight this morning, and neither Uber nor Lyft had restructured their business to change drivers from contractors to staff. So Lyft said it would halt its ride-sharing service and go dark in California. Uber was expected to do the same. And then, at the 11th hour, an appeals court gave the companies a temporary reprieve, so nothing shut down and you can still take an Uber in California today. But there appears to be a long road ahead. We asked CNBC's Deirdre Bosa if this fight was over yet.
The fight certainly isn't over, and you could see yesterday's extension as at least a short-term win for Uber and Lyft because they didn't go dark this morning in California. They get to continue to operate as they always have, at least for the next few months. The big pivotal next moment for the status of drivers in California will be that November 3rd ballot initiative where voters are going to get to decide whether independent contractors currently serving as drivers will have to be turned into employees. Uber and Lyft, they cite a survey that shows that about 1 in 4 drivers actually don't want to be employees. They want to remain independent contractors because it gives them more flexibility. And at the same time, Uber and Lyft are saying that they can deliver some benefits and some protections without actually bringing on all of their drivers as employees. However, there is a very vocal group of drivers as well, and these are largely the ones that do not work part-time. They work evenings and weekends. They put themselves at risk amid the pandemic, and they say that they deserve these protections and benefits that employees get. So it's a fierce debate, and really we won't know where those lines are drawn until that November 3rd ballot. Yesterday, it felt like it was this big dramatic moment for the gig economy where Uber and Lyft were threatening to go dark at midnight if they didn't get an extension. That extension was granted, so rideshare continues to operate. It felt like it came down to the moment. In reality, we've been talking about AB 5 for years. Uber and Lyft have had since January, when it was actually made into a law to figure out a way to turn their drivers into employees. They haven't done so. Instead, they've said that AB 5 doesn't apply to us, so we're going to continue to operate as is. They've had lots of time to figure this out, but they've chosen not to. So that's when it came down to this really public showdown. And keep in mind that California is a significant part of gross bookings, but for Lyft, it's about 12%. For Uber, it's less than 9% of overall gross bookings. However, it could have really important implications for the longer term because California is acting first on this sort of gig worker law, but other states like Massachusetts, New York, New Jersey, they're watching what happens here in California very, very closely because they're considering legislation of their own. The precedent that is set in California could have a very wide impact outside of the state and for the United States in general.
Okay, time for this week's numbers round. We'll kick it off with 24.7. Sales of existing homes, which are just houses that have been previously owned by someone else, not new construction. Well, those jumped 24.7% from June to July, according to the National Association of Realtors. This is the biggest monthly surge in the history of these records, which go back to 1968. The spike in sales comes as the supply of homes on the market plummets, prices rise, and mortgage rates stay very low. Next, 2. One of Amazon's top-ranking execs is retiring after more than 2 decades on the job. Jeff Wilke, the CEO of Amazon's worldwide consumer business, said today that he would step down in the first few months of 2021. Wilke has been widely considered to be a potential successor to Jeff Bezos, should the founder and CEO ever leave his post. And finally, $579 million. Big data analytics company Palantir lost $579 million in 2019, according to the company's confidential S-1 that was leaked this week. TechCrunch reported the leaked filing and pointed out that Palantir had a near-identical loss in 2018. But 2020 is currently looking a little better for the company, which saw a 49% year-over-year increase in revenue in the first 6 months of this year. Palantir confidentially filed to go public back in early July. That's it for After Hours, but before we go, here's one more thing to watch next week. The Democrats wrapped up their convention last night, and next week, the Republicans take center stage starting Monday night. Stay up to date with every development from the historic virtual convention by going to CNBC.com and downloading the CNBC app. We'll be back here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us then.